This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Wednesday on expectations for higher demand as the U.S. dollar weakened, and a report showed U.S. crude and gasoline inventories fell, while the release of inflation data may point to a more supportive economic outlook. Brent crude futures were up 51 cents, or 0.6%, at $82.89 a barrel at 0630 GMT. U.S. West Texas Intermediate crude futures, WTI, rose 55 cents, or 0.7%, to $78.57 a barrel. U.S. crude oil inventories fell 3.104 million barrels in the week ended May 10, according to market sources citing American Petroleum Institute figures on Tuesday. Gasoline inventories fell by 1.269 million barrels and distillates rose by 673,000 barrels.
OPEC stuck to its forecast for strong growth in global oil demand in 2024 on Tuesday and said it would switch to focus on projected demand for OPEC plus crude, reflecting that the wider group is now the main forum for cooperation in the market. The OPEC, in a monthly report, said it expected world oil demand to rise by 2.25 million barrels per day, BPD, in 2024 and by 1.85 million barrels of oil per day in 2025. Both forecasts were unchanged from last month. This is the last report before OPEC+, which groups OPEC and allies led by Russia, meets on June 1 to decide whether to extend voluntary oil output cuts into the second half of the year. OPEC sounded an upbeat tone on the economic outlook.
Moving on to the top news in the energy sector.
Singapore's marine bunker sales declined for a fourth consecutive month in April, official data showed late on Tuesday. April sales totaled 4.24 million metric tons at the world's largest ship refueling hub, down 4.7% from March, according to data from Singapore's Maritime and Port Authority. Monthly sales posted an annual decline for the first time in 4 months, a sign geopolitical shipping tensions have started to ease compared to start of the year.
China's state planner has ordered provinces to develop energy efficiency plans for entities accounting for about 70% of consumption and carbon emissions by 2025 and, according to a notice, to meet targets that have been falling short. The National Development and Reform Commission, NDRC, said on Tuesday the plan will cover by the end of 2025 entities consuming at least 5,000 metric tons standard coal equivalent, down from 10,000 tons outlined for 2024. There are about 20,000 of these entities nationally, and all of them will be covered by inspections by the end of 2025, according to the notice. Next, we have the top news in metal markets. U.S. copper prices on the CME hit a record peak on Tuesday, fueled by robust demand in the United States and fund buying. The May contract hit a high $5.082 LB or $11,203 a metric ton. Globally, prices have risen on increased expectations for demand growth for copper from electric vehicles and other applications, such as electricity demand for artificial intelligence and automation, and concerns about future shortages.
Aluminium inventories in warehouses registered by the London Metal Exchange, LME, rose to the highest in more than 2.5 years, having more than doubled in less than a week, data showed on Tuesday. Last week, commodity trader Trafigura delivered 424,000 metric tons of aluminium to LME warehouses for lucrative financial deals, 3 sources familiar with the matter told Reuters. On Tuesday, data showed that aluminium stocks jumped by a further 131,075 tons to 1,033,625, their highest level since October 2021 and a gain of 115% since last week.
We will now look at the top news in the agricultural sector.
A U.S. appeals court on Tuesday upheld a rule from President Joe Biden's administration that set the amount of biofuels that oil refiners were required to blend into the nation's fuel mix from 2020 through 2022, rejecting a challenge by oil refiners to the mandates. The U.S. Court of Appeals for the District of Columbia Circuit found that the U.S. Environmental Protection Agency, which administers the obligations under the Renewable Fuel Standard, RFS, lawfully exercised its discretion in setting the requirements for the 3 years at issue. Under the RFS, oil refiners must blend billions of gallons of biofuels into the U.S. fuel pool or buy credits from those that do. The credits, known as RINs, are used by oil refiners and importers to show compliance with mandates.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.